Well, good afternoon, investors and groundhogs of all kinds. My name is Mark Robertson. I'm managing partner and founder of Manifest Investing, and I'm joined by a delightful fellow investor, Ken Kavula. Good afternoon, Ken.
Good afternoon, Mark. Good afternoon, everybody. It's trying to be spring here, but it's a month and a half too early. My wife is really worried about all of her bulbs, so we'll see what happens here.
Yeah, we are a bit concerned when it warms up. Sometimes the buds can be endangered on our trees also, and that can be a fairly nasty thing also.
Yep.
But good stuff. Well, it's good to see everybody. That image up at the top continues to not be an actual photo. And I know many of you say that can't be Photoshopped, but it sort of is Photoshopped. It actually is a dream that Ken and I have of going to Punxsutawney someday. And
It looks perfectly natural to me, Mark.
with our toques. Good stuff. All right, we're going to talk about last year's Groundhog contest and the one that just came to an end on February 2nd, a few days ago. And we will be celebrating the art of the launch, thanks to our friends at Space Coast down in Florida again, a tip of our hat in their general direction. And as Herb was just saying, it's apparently 81 degrees down there. Good thing. So it was kind of a fantastic finish to the Groundhog. So we will highlight that a little bit. And we are going to spend some time not gaslighting, but green lighting. And then, Ken, I'm going to attempt to persuade you that if you don't want to be a raconteur, maybe you want to be a courtier. So I'm going to try to persuade you that maybe we switch you to a courtier.
Oh, okay. I do speak French, Mark. Remember that, okay?
All right. Well, you can take over when that slide pops up then.
Okay.
All right. And of course, Groundhog Day, as the contest was coming to an end, did feature a heavyweight fight. We will be talking about that. The armadillo is simply there because we don't have an armadillo yet in the zoo animals at Manifest Investing, and Matt Spielman thought we might want it or need it. And maybe we'll come back to that topic, maybe in some type of active versus passive investing debate in the future. I don't know. But and last but not least, and I think this is very important, we do want to conquer Pithecophobia. And Ken, are you familiar with Pithecophobia? Didn't lose you, did I? Ken?
Hello?
Oh, did I get you back?
I am back again. Okay, we got it.
Intermittent. I don't know if that problem was on my end or not, but I was just asking if you're familiar with Pithecophobia.
No, that's a new word for me.
Well, it's actually the fear of monkeys.
Oh, all right.
So we want to conquer that here today.
All right.
Pithecophobia. And it's a new word for me too. So, but so is courtier. And we're going to, this is like vocabulary / investing week. And just a great time to be around. All right. Here's our standard disclaimer. No investment recommendation is intended. This is all about education and the illustration of a bunch of principles, philosophies, methods, and techniques that have been deployed by the modern investment club movement for a number of decades, perhaps 8 decades. So we're basically going to share some of that type of stuff. We will be talking about a lot of stocks here today. Please do not run out and buy any of them. Please do your own homework to make your own decision. We are just basically here to demonstrate and illustrate that this technique can be quite formidable. And it doesn't work for everybody. There are no guarantees in the world of investing. But our experience over the years has been that if you take the time to learn and kind of dig in, it can be a most rewarding process. Again, there's no promise of success. All you can do is raise the probability. All right, the roundtable comes up in about 3 weeks. That's our monthly webcast. It's our award celebration, hence the Golden Knights on the right. If you'd like to get a reminder about that event, it's a monthly event. Send an email to nkabula1@comcast.net, and we'll add you to that reminder list. Our 2 email addresses are down at the bottom if you have any other requests or comments in mind. Anything else, Ken?
No, I understand what we're talking about, and I like the looks of the next graph, so let's move to that slide.
All right, so here we go. Just again, the graph that we tend to think of as the macro, or the look at the stock market, again, through the eyes of the value line arithmetic average, which are the green bars. Those are quarterly bars, and we just use that as an indication of the stock market. So you can see that time when we believe that there was just a whole bunch of stimulation in the market a few years ago, and we believe that those green bars will basically follow that blue line. And Ken, you might note that January meant that our green bar is now ticked up above the blue line.
I'm noticing that. Yeah, that I don't know what that says for February and March, but we'll have to wait and see, huh?
And you can actually go back. These are recorded. You could actually go back and hear that Ken and I basically predicted that at some day in the future, we didn't know when, but that green bar would ultimately touch the blue line. So there you have it. Of course, the box at the right shows you that it has been a fairly strong year so far in the stock market. In the 5 weeks, the major indices have all been in pretty good shape. Friday of last week, the jobs report came out, and that was so strong that it actually caused concern that there could be more interest rate increases in inflation, and basically caused the market to take at least one speed bump day off and continue to be weighing in. But again, we're trading pretty close to the blue line, so I'm not surprised that the average forecast is shown in the box down below is hanging in that 11 to 12% range. Anything else here, Ken?
No, it's interesting that we've had some really big movement days. I did listen to Mr. Federal Reserve today when he was speaking in front of the Economic Club of New York.
Mm-hmm.
He was very relaxed give and take of questions and everything, but I watched the market go up 300 points as he spoke. That's the Dow, and then at the end of his speech come right back to where it was when he started speaking. So the market really didn't have too much to really react to. I'm looking right now at where the market is, and Dow is flat, S&P up about a third, and NASDAQ up about 2/3 percentage-wise. So it's a pretty good day in the market yet again, and we're into February now.
Yeah, despite some of the concerns. Well, long-term picture, again, I think we generally argue that it's not that it's not important. It's just we don't focus on the market. We actually focus on finding excellent companies that are on sale, and you really don't have to worry about most of the stuff that's on TV most of the time. All right, here is another indicator that I thought was just kind of interesting, because this actually causes most of the rhinos, the institutional analysts and investors, to break out in a cold sweat in a good way. And we're talking about the Golden Cross. Now, Ken, I know you are a disciple of the Golden Cross. You
Of course I am. Yes.
Do you have this chart on display in your kitchen, or?
Right. I have it on a time thing so that I get updates every 10 seconds.
Oh,
so,
awesome!
I don't hold too much with this kind of stuff, Mark. I'm sorry.
Yeah,
you'll just have to explain this to the group here.
Yeah, and the only reason it's as important is because there are so many of them that do pay attention to it. It falls, at least it's a threat to fall into that realm of self-fulfilling prophecy a little bit that we talk about from time to time. And just simply knowing that there is this indicator out here. And again, the blue line through all of that is the long-term moving average, kind of a look back, or a trailing average. That's based on 200 days. So it's basically looking back a year. And the red line is looking back basically a quarter, could even say 2 months. But the shorter term moving average, this red moving average that you see on here, has actually broken through. And this moment in time is this golden cross. When it crosses going the other direction, the red actually breaking and going in the other direction, it's a death cross. But many institutional investors and traders actually do pay attention to this. So what this is basically saying is it explains a little bit about January in the rearview mirror, and you can see the strength of the January market, here basically in the gains that have been made back from when we were down in this range here up to here. That's quite a bit of strength. So again, it's just a force. It's kind of like artificial gravity for those who follow that stuff, and whatever. All right, this is something that we pay a lot more attention to, and I thought you might enjoy this graph, Ken. It's a decent look at bulls versus bears over the long term. Anything jump off the page at you, Ken? I'm going to box something in.
Yeah, I think what jumps more than anything else, Mark, is the relative length of the bull market, no matter which one you want to pick, compared to the length of the bear market that precedes it. There doesn't seem to be any real relationship, especially in modern history, and maybe I'll go back to 1950 and move up from that point. And it looks like only one time did the preceding bear market actually last longer than the bull that followed it, and that would be at the .com in 1999-2000.
Yeah, you just have that blip there. Yep.
Yep. So for the most part, I'm really kind of pleased that the bull market that follows these bears tend to be much longer and give us a lot of room for moving in the other direction, a lot of room for expansion. I'm not so sure I want to look at some of this data that's back, especially before the SEC. It just shows the Wild West attitude of the markets in the early part of the 20th century, especially the Roaring '20s.
Yeah,
what was going on there?
That's one of the things I took away from this. Many of you will ask the question, Mark, how come you don't like to talk about or graph or trend or use data from pre-19? It's actually 1941, but somewhere in that box. And the reason is it was a different place, just like Ken said, Wild West. So I basically disregard all of this and then notice what's going on from then on. And then I also think back to the design of the stock selection guide by George Nicholson. And that's back in this time frame here, and a fairly natural time frame between recessions of approximately 5 to 7 years. And that's why the stock selection guide has 10 years on it for historical data. You're looking at it right there. And why that has become a bit challenged, notice over here, we're obviously at something much different than 5 to 7 years between recessions on the right-hand side of this chart. It's kind of cool to see it played out like this. And then, of course, the magnitude of these two numbers is also incredibly important. That, and I guess I will just say editorially, and this is bordering on soapbox, if you compare those two numbers, you'd think you'd spend a lot more time thinking about the upper number, the returns during bull markets. But to me, everything on TV, with the talking heads and everything, they spend so much time obsessing over bears. And you look across this chart, look at these yellow or brownish time frames in here. They're relatively insignificant. So the average moment on financial media is basically wasting our time if they really focus on that stuff. So that's just my opinion. All right. Anything else here, sir?
Where's I'm getting somebody asking the source of the graph. Is that it over on the side over there, Mark? Maybe it's First Trust up in the corner up there.
It almost bit me. It is First Trust.
Yeah.
Brian Westbury and the gang at Chicago's First Trust. So
okay.
I wondered why I didn't have a citation on here. It's because it's on there. Okay. First Trust. And they do a lot of good stuff. We'll be talking more about them in the future. All right. So, Ken, if you're ready to strap yourself in, let's talk about the final results for last year's Groundhog Challenge. So the 22 contest, and We will be talking about Lisa Robertson as the individual champion, the Space Coast Model Club out of Florida, Northern Florida, as the now two-time champion for the group investing category. And David Einhorn did sneak in there and win, although he led the entire year for Greenlight Capital as the celebrity groundhog. And those of you that have been here over the last few weeks or months have heard me talking about how rapidly I was moving up the list. And I actually went from like around 150 up to finishing at 43rd. So I'm going to invoke Vince Lombardi here. And I'm going to agree with Vince here. I didn't lose this year's contest. I just ran out of time. Are you good with that, Ken?
Well, only if you want to report to us a month or two from now who actually won, okay?
And I hate it when the clock runs out on investing. It's just not any fun. Unless you're in first place, then it's a really good thing. All right, here's a repeat of our Groundhog Creed, and you'll see that I have added a little bit to it this year. But again, we like to lean on the lessons of Graham. That's Benjamin Graham, David L. Babson, one of the great influences and grandfathers of growth investing, and our own George Nicholson. And we think that if you follow and study and try to figure out what did they do, why did they do it, you can do pretty well as an investor. And that's basically what this community does, is try to take the lessons we can learn from them and a few others. And again, it increases your probability of success. No guarantees, but it does. And then, Ken, here's your word for the day. A coterie. And this is going to stick. You don't have a choice here on this one. But here's the cotier. So if you don't want to be a raconteur, maybe you could be the chief cotier.
Well, do you know a synonym for cotier, Mark?
I don't. Is it dangerous?
Well, not exactly dangerous, but it's not exactly a very pleasant.
Does it rhyme with pleasant?
It recalls feudalism.
Uh-huh.
A cotier is originally Irish, and it comes from somebody that was kind of sold with the land and farmed the land for somebody else. And you might use the word serf as a synonym for it, especially if you're looking at the system that existed in the late 1800s, early 1900s in Eastern Europe. The whole economic system was based on serfs farming small patches of land for somebody else and not owning any of the land and having very little rights to anything coming from the land. We need to be kind of careful when we're using words like cotier, but if it's coming from coterie, I'm just not sure that coterie and cotier derive from the same basic root. Maybe they do, but I'm just not sure.
I need to dig a little deeper on that. Now, I'm okay with being a peasant. In fact, I would almost think of it, what we do as a groundhog uprising, or when the peasants are revolting. I'm okay with that, as long as you're not the guy in charge. I'll do a little bit more homework, but I do think this word's kind of magical in terms of what it says in the rest of the sentence. And it does. I think it describes what we do.
If that's where the word coterie is coming from, a group spending time pursuing common interests, I can buy that.
Okay, so I need to work on cotier, and unless it's honorable, you're not interested. Okay, I'll buy that.
But well, I'm just not sure that the two words are related to each other. They might be, but I'm not sure they are.
All right. You can expect that reference to come back in a future meeting. All right.
I got it. Okay.
Here we are now. 2022 is kind of weird. Not only did the groundhogs underperform the market, although the magical finish that we just had. It was a fantastic finish. We as a community of hogs were down here somewhere. And then in January, that disappeared and basically almost caught up. And then compounding that, for the first time that I can remember in 16 years, the rhinos, the Wall Street institutions, the celebrity groundhogs that are part of this actually beat the market and us. So that's kind of rare. And then another weird thing that kind of happened is we actually had better selection outperformance than historical. That's one of the higher numbers in the history of the contest, breaking 50% and almost 51%. It's just kind of strange. Very strange environment for a fairly strange year. So, any thoughts on that, sir? We'll be taking a look at what's behind those numbers, but
yeah, let's keep looking at the slides because this has been a very unusual year. I mean, heck, Mark, we looked at these results on a weekly basis. Maybe that's the first time in history it's been done on a weekly basis, and we looked at them on a weekly basis, and to be honest, we were disappointing ourselves week after week after week with how few of the participants were actually above that $1 million mark.
Yeah, and it exploded in the last.
Yeah.
If we hadn't had that bad last day, the day of the jobs report, we would have been quite interesting.
That Thursday, February 1st, that was enough to send almost anybody's portfolio up a goodly percent in one day. So.
Yep. So here's just a look at a year by year of the results for the group. And the important thing is right here. When you take a look at the collective results, and again, we're talking about thousands of entries now. The average groundhog checks in at 13 versus 9.1 for the general stock market. So just good, clean fun. We are on a 2-year losing streak. These 2 years, the last 2 years have been a bit of a challenge. And you can see the 2 years on the right are lower than the 2 years on the right of the Wilshire 5000. So,
Mark, I don't know whether I should tell you this or not, but you're getting heckled by a group of our audience here claiming that at least one Robertson can pick stocks.
I'd say they're jumping the shark a little bit there. All right. Well, since you brought it up, here is that Robertson who is picking stocks. Now, this is the stuff that we watched all year long, and you may recall that even 2 weeks ago that there was only one, and that was the celebrity groundhog up at the top, Einhorn, that was greater than $1 million. Now, before that jobs report, a bunch of these were above $1 million. I mean, there was like this many. So that actually trimmed back a few, but at least we finished with several more above the $1 million mark. So the relative returns are on there. Some people were in this. Herb Lemkel was at the top of the charts, start to finish, and a lot of very familiar names on that chart. But Lisa did come in and take the trophy. David Einhorn, on behalf of Greenlight, actually took his third Celebrity Groundhog Championship we'll be talking about. And then we'll talk in great detail about Space Coast coming in and walking away on the very last day for the second year in a row. Now, I know that they annoyed the Mid-Michigan Model Club a year ago. And as you'll see here in a minute, they were annoying Montgomery County this year. So, of course, we celebrate the achievement, but it was kind of fun to watch. And and by the way, that this is the Facebook photo for Jim Gallagher. I think those are Jim's feet. So we'll probably get a picture of him later. Either that or it's a picture of your toes. Is that your toes in the sand last week, Ken?
No, that's not me. No. I think, Mark, what we should be doing is tying this relative return column into the long-held belief that if an investment club can do about 15% a year over long periods of time, they're really going to be doing quite well versus some kind of mythical average. You and I have reinterpreted that to to mean beating the market by about 5 points.
Mm-hmm.
And we've given plenty of ammunition to folks in the bull sessions here, showing that even if that beat drops down to as little as 1%, it still is statistically significant as far as your nest egg is concerned, and it still is statistically significant as far as comparisons to the professionals out there that keep claiming that amateurs can't do any of this stuff.
Yeah, and that's one of the reasons that we embed the celebrity groundhogs in there, and that's the ones that are in italics. And this is by far, and you'll see a little bit more about this, the more italicized entries on here in the at the top of the chart than we've seen in quite a long time. But the other thing that's kind of fascinating to me is the ones in bold are investment clubs generally. Those are all clubs, and there's quite a pack of them. There's quite a few just off the chart also. It's kind of neat to see that, because another thing that's kind of important as we look at this, and again, this is a game, it's a contest. Some of it is fence swinging, but not very much. But the other thing that's important is many of these clubs are actually putting stocks that they own in their club portfolio in this contest. So that's actually quite a good harbinger.
Yeah, Mark, that B.I. Baker Club, I belong to that, and it's showing 5% relative return. That entry is the same each year, and it's been the same for out of the last 7 or 8 years. On the day before Groundhog Day, we take a dashboard, a manifest investing dashboard of our entire portfolio, including our pounce list. Those are stocks we'd like to own. We then rank it with par from top to bottom, and then we pick the top 8, 9, 10, depending on where a nice line would be drawn between big jumps, and take the top 8, 9, or 10 stocks and send them in as our entry.
Mm-hmm.
And this club, this Baker Club, has been performing really, really well since we started putting the portfolios in that particular method, as has the Mid-Michigan model, and as has the Kabula Family Club as well.
Mm-hmm. And just a couple other mentions on here. We heard from Julie and down in Cancun last week. She made quite a charge at the end there. Anna was making quite a charge. She's our 2-time individual champion from Holly, Michigan. Happy birthday today to Bob Hooley. We're going to talk more about him. That's Bob right over here. It's his birthday, so everybody sing happy birthday through the internet to Bob. And he's an integral part of that Space Coast Club. We're going to talk a lot more about the monkey. I know you don't want to talk about it, Ken, but it is time for you to get over your fear of the monkey, and we're going to deal with that. Notice that Sean Mace is on the list. We love Sean, and there he is. He made the list. He actually edged me out. We were neck and neck for that last spot. And there are just several others that are on there. Notice that Cy had a nice finish this year. And a lot of long-term power there. George Mackey did exactly what he said he was going to do. And that is maybe not win, but finish very, very respectable. So congratulations to Lisa and the others. And we'll take a closer look at them. So here's Lisa won the 2022 version of the contest. Here is just looking back in history all the way back to the first contest won by Steve and Bo from Knoxville, Tennessee. You'll see Bo later in the program. Bo was his dog. I'm not so sure that he was a stock picking dog, but he certainly made the trip with Steve. But a number of names on there that you will recognize. Guest damsel Ann Manning back there in 2010. She won in the closest photo finish that I can remember against a bunch of ladies from Minnesota back in 2010. Our own Hugh McManus with his double wins in 2014 and 2017. Anna Gombar came in and did it again, and she was a threat to win last year. She has quite a track record that'll show up on the last slide also. And just a whole lot of good, clean fun. John Kimmel from Wichita. John has won as an individual and as a club participant, and his newsletter is also a winner. So he's the only 3-time winner with a win in each category. All right. And of course, that infamous 2008 contest, I managed to edge out one other guy. I'm not even going to tell you who it was on I don't know if it was the last day, Ken, but it's pretty close.
It was the last day. Yes.
Okay. All right. Here's how Lisa did it. Lisa has been at this for 10 years. We know Lisa from our visits in the face-to-face conferences and conventions out in Seattle. And I missed those, Ken. We need to get back out there sometime soon. Here are the 10 stocks that she chose for 2022. You can see that 8 of 10 of them beat the market. The only 2 that didn't was best small company selection. Our selection of Medifast and Carriage Services are the only 2 that misses. And her performance over the 10 years places her in the number 24 position all time for anybody with at least 3 years. So what do you notice about this list of companies, Ken? How does it strike you?
Well, I don't think that that this particular entry is swinging for the fence. I recognize a half dozen of the names. I own 2 of them myself, and when I can look at an entry and know more than half the names and own 1 or 2 on the list, I'm saying to myself that there might be 1 or 2 speculations on the list, but for the most part, these are stocks that I might be interested in owning. And what I like to do, and I've been doing it all year by going to the website that Mark set up and taking individuals that are doing well and looking at their portfolio and trying to come up with ideas from the portfolio. I'm not so sure there's not 2 or 3 great ideas sitting right here in front of you for next year.
Well, I know Lisa's with us. So again, congratulations, Lisa. The thing I take away is there's a lot of names on there that aren't necessarily household names. And I'm not seeing Apple or Google or Amazon. And in fact, last year we had a program where we kind of celebrated the medium-sized workhorses in our portfolio. I kind of think Lisa's entry here captures a lot of that type of spirit of things that are kind of off the radar a tiny bit. And these are all high-quality companies. And oh, by the way, I'm pretty sure she owns most of them, if not all of these, in her personal portfolio. So it's a tribute to an effective selection and management system. Any other comments? Again, Lisa, if you want to chime in, just go ahead and raise your hand, and if you have audio equipment, we'd be glad to hear from you.
Mark, you're getting a comment from Bill Warner, and he's not doubting the reliability of the results, but the chart itself, he thinks there might be a math error on core card. It might even be a typo, or it might be a math error of some sort. I'm sure that Bill could give you a more detailed explanation of what he's seeing. Or Bill, if you want to tell me what you think the math problem might be, I'll relay it to Mark through the question box here too.
Okay, and just to head off any other questions and make sure you understand what you are looking at, that February 2nd, 2022 price that you see listed there is what is referred to as a total return price. So it's not the stock price that was listed on the stock market for that day. It is the price that basically is corrected to include any dividends or splits, so that the comparison of the 2 numbers allows you to do a total return calculation on it. So sometimes that'll explain a slight difference. I've run into that question before from others. And again, you'll see a slightly different number if you go back for any one of these that has dividends going back a year.
Well, I think, Mark, that the issue that he's talking about is that you're showing the stock actually declining between 2022 and 2023.
Mm-hmm.
And yet it's not red over on the right-hand side here.
Oh, the only ones I did in red were the ones that were below market. It actually still beat the market.
Okay. All right.
That could be it. That would explain too. Okay.
All righty.
Let's go ahead and move on. Oh, as soon as I can get control back. All right, so let's talk about the club finish, and it was an interesting one. The at the end of January, this might have actually been the night of February 1st, based on the picture. I had sent a clip of the club standings to some representatives of the Montgomery Club at 14 there, and the Louisiana Mississippi Model Club, who, by the way, we'll be spending some time with face-to-face here in a few months, and Space Coast. And Montgomery had a fairly comfortable lead. Some people suggested that maybe they needed to be checked for performance-enhancing drugs, and it was with 1 day left in the contest. So good, clean fun. And this is what Groundhog Day looked like if you were a member of these investment clubs, specifically Montgomery County and Space Coast. And I actually had some people, I'm not going to name names, there are a few millennials who reached out to me and said, who are Ali and Frazier? So again, that kind of fits.
It just makes you feel real old. That's all, Mark.
Well, I had made a comment about, as a fairly young man, boy, listening to this fight on the radio. I think it's from 1971. Anyhow, that's what that day actually turned out to be. So 30 minutes into the Groundhog Day trading, Space Coast had leapt up within $800 of Montgomery County. And it turned out they had a stake in Facebook, well, Meta Platforms, but Facebook. And by lunchtime, they had actually taken the lead. Space Coast had taken the lead. So at that point, Kevin Gologly, and I know he's in the audience, he may raise his hand, he may have a comment, but he attempted to get me to terminate the contest, basically leave time on the clock and shut down the contest, and and basically skip the last afternoon of, if his Montgomery County went back into the lead. So you can see the kind of fun that we were having. So then just after lunch, with just 3 hours to go, Montgomery had reassumed the lead. By the way, there were like 6 or 8 more where they flipped places during the day. And there you can see, again, he wanted to end the contest mid-afternoon. And then the last hour of trading started with Montgomery County being comfortably ahead by $3,000, 0.3 percentage points. We wondered what the last hour of trading, Sean and I refer to that as the power hour. Is that a CNBC thing, Ken?
Maybe.
I don't do this hourly stuff anymore. So here's basically what happened then in that last hour. So for the second year in a row, Space Coast comes in and edges out Montgomery County in the last hour for a winning championship. And oh, by the way, Bob Hooley, happy birthday, Bob, actually climbed above $1 million Groundhog dollars in the last minutes for the entire year. So this is just some good, clean fun. Thought you guys might enjoy that. I would love for us to have the live real-time scoreboard available so we could do this with a live stream maybe in a year, just in case it's like this, because it was really a riot to watch it. During the process, and while you were laying on the beach, Ken, reading your book and drinking your beverage, some astute observers pointed out that the presence of the monkey may be explainable. And they're basically citing that our crackerjack team of accountants that takes over our conference room may have a conflict of interest here. So I got to buy that. I mean, that's clear thinking,
Okay.
right?
I'm going to stop you for just a moment, and I'm going to unmute Janet. Janet wants to say something.
Okay, go ahead, Janet.
Janet, you're self-muted, so you'll have to unmute yourself. Janet Lewis, you'll have to unmute yourself if you want to speak to us. And she took her hand down, Mark, so I assume that was an inadvertent. Okay?
Sorry, I didn't know my hand was up.
Oh, okay, thank you. Thank you.
And we will all notice that Kevin, by the way, was quite cordial and respectful, and congratulating Space Coast on their last second victory. So They are back-to-back winners, repeat winners in the Groundhog. They had to share it last year. This year they came in, stole it, and now they don't have to share. So, no, they didn't steal anything. A good performance, a lot of good entries on here, and quite a track record. We're going to talk about the cage match between Bower City and Broad Assets here in a few minutes. But there we go. There we have it. Anything else on here, Ken, that you want to point out? Plymouth is Kimmel's Club.
I have a lot of folks that want to speak, so I'm going to let this go a little bit longer before I unmute anybody, okay?
Okay. We'll get a little bit further along, and then we can
all right.
We can open up the floor for wild questions. All right, here's the 2 years of entries for the Space Coast Club, just so you can get a feel for the type of companies we're talking about. Again, fairly eclectic selections year over year, and you can see the results. And again, so these guys have been at this for 2 years with us. They do not qualify for the Borough of Fame, but if they did, and when they get enough at bats, they will. They would be in the top 5 or 6 positions. So they're back this year, so they are percolating and hoping to end up on the list we're about to look at.
Mark, explain why there's no numbers for Sharps compliance in the 2022 entry.
Sure, and Sharps compliance, the bottom stock up here on the last year's entries. I'm having trouble finding my cursor. I don't know why that is. Need to work on that. But we're talking about this one right here. Sharps compliance was a best small company selection by us, Ken. The company was actually taken private during the year, so the company was bought for $875. So that's the reason you don't see any numbers. Basically taken out and converted to cash along the way. And at one point, it was hovering, I believe, down fairly close to $2 before that $875 offer. So, but that's why there are no numbers there now.
Okay, I knew why it was there, but I'm getting questions about it, so thought we'd head that off. Okay.
And again, the green numbers for relative return just simply signify that the selection beat the market. So you can see that we're talking about 60 to 65% for the 2 years, which is relatively high. Okay, so let's go ahead and press on. Talk briefly about David Einhorn, and I had forgotten that he had won twice, but he has now won 3 times. And it's kind of fascinating because he runs either very hot or very cold. By the way, he's in first place right now after a few days in this year's contest. But for the 3rd time, he did win. But you can see the celebrity rhinos over the years. We love the Brown Small Company Mutual Fund, and that has been in there a couple of times. Kathy Wood did win back in 2019. And just some fairly well-recognized names, including that oracle out in Omaha, Warren Buffett. Just this one, just to kind of make a couple of points. Here was the distribution of entries versus where they finished last year. A lot of times people will ask, do the winners come from the fewer selection zone? And in general, that's somewhat true, but there's also more volatility. The thing that was really weird about this year is the celebrity groundhogs. These are all celebrity groundhogs finishing relatively high compared to the field. And again, we had ugly year. These are all finishing below the market, right? So that's a pretty high population, but it's dramatically better than it was on December 31st because a lot of these dots moved up in that last month. So you can see Lisa and Space Coast both won with 10 selections for this year. And of course, Kathy was in the last or next to last position all year long, and she ended up down here. By the way, she had the best month in the history of her fund in January, Ken. So anything jump at you here as far as the influence on the number of selections?
Well, we run our own contest here in mid-Michigan, and the same thing holds true in the Groundhog as holds true in our contest, that the winners tend to come from people that are picking a reasonable number of stocks and not going for the maximum picks that you can make. I think once you get above 8, 9, 10, 11 picks, you begin to mimic the market rather than have a good chance of beating the market. So I'm even surprised that the winners picked 10. I would have guessed closer to 7 or 8.
Yeah, and you to me, and maybe I'm just imagining things here, but you actually see that we talk about Sweet 16 or anywhere from 12 to 20 being a well-diversified portfolio. And what you see playing out here is there's a lot less randomness, a lot less variation on the right-hand side of this chart. And it really does reflect that that principle of 12 to 20 or 16 stocks making is being a good number of stocks for a portfolio. A lot more volatility to the left.
Yeah, I want to keep pointing out that the Groundhog is a lot of fun. It's one of the most recreational things that we do in the community here. But at the same time, it is a one-year contest, and things that we talk about for our own real money portfolios probably are not being followed as closely as you might follow them in a Groundhog portfolio. I'm not sure that I care too much about diversity in my Groundhog portfolio as I might care in my real money portfolio, for example. And I think that tends to skew me more towards medium and small companies because you're looking for the faster growing, the higher par companies.
All right. All right, it's time to talk about your affliction, Ken. We just have to, I mean, I was kind of amazed. I went back and looked at some of the early bull sessions we did on this subject, and there's some cool stuff in there where he actually has video of a monkey picking stocks. It's a great thing, but that's Graham Stephan up on the upper left, and you can find him on YouTube. You can find links to all of these sessions on the Manifest Forum. But again, the monkey has got a pretty good track record, and I don't think it's something we should run from. I think we should actually embrace this rather than be annoyed by it in any way, shape, or form. And the reason I say that is the exercise that Graham went through and that we talked about back in those bull sessions a year and a half, almost 2 years ago now, was the notion that he was just merely pointing out that buying some small and medium-sized companies is good for portfolios. And that really is what is represented by the monkey tossing darts. Basically shopping, and I'm doing air quotes around shopping, amongst the entire universe of companies. And so I went and did one of the things that you asked me to do, Ken, is, okay, we're talking about 1 year here, but what about if you had done this and basically made 5 random selections of companies, much like a monkey tossing darts, going back 8 years? And I basically used a random number generator, grabbed 5 companies completely at random, but from our 2,400, 2,500 companies that we cover at Manifest, and then looking back 8 years. And I think it's kind of fascinating here to see the results. Look at the slow start out of the box with the amount of red ink on the lower right-hand side of this image. Again, these are the picks for 2015, 2016, 2017, okay, from left to right. And then look at that. The one that really grabs me is the year that the dart landed on Tesla. 3rd year down, February 2nd, 2020. Look at the returns on the right-hand side from Tesla, Garmin, Evercore Partners, and Owens & Minor. And that obviously was a pretty special performance that year if he had been in the contest. So with the ones up at the top are the actual entries that were showing up this last year as he annoyed us. But then we went back and looked at 8 years, and I'll show you now why I wanted to do that.
Now, these are not his choices. Am I correct, Mark?
The ones at the very top are because we had only done this for 1 year. So those top 5 are the actual specific selections that were made for last year. And again, 4 out of 5 of them beat the market.
Yeah, there's no doubt in my mind, but I'm also looking at 6 years out of the 8 where the returns are terrible. So,
and that's what we're going to talk about now. So to be clear, the first 5 listed there are the actual selections that we've been featuring for the last year. The 7 years below that were simulated just for a reason. And again, look at those names. You basically have a potpourri of small, medium, and large, in some cases, obscure companies on that list. And oh yeah, by the way, you're going to get some regional banks along the way. Okay. And here's the reason I wanted to do that, because Ken was getting awful annoyed that the monkey was up in the top 10. And you put those 8 years together and take a look at it on what I want to call our Hall of Fame or a borough of fame or shame for our celebrity groundhogs. And the monkey, going back and doing that over the 8 years, I think this is important. I keep losing my cursor. You basically end up in a situation where the monkey is bringing in a 12% return versus 10.8 for a 1.1% relative return. And I'm going to go way out on a limb and imagine, maybe I'm hallucinating, but I think the reason is, and I think this is the conclusion reached by Graham Stephan and us in our bull session a little over a year and a half ago, is because you are shopping in medium and small size companies. You're equally distributing. And I think that explains where this ends up over the long term, slightly above market averages. And I think this would be the case, plus or minus most of the time. So that's basically why I threw this together, Ken.
Well, I'm going to just pose a question, Mark, and see what you think, okay? I'm just wondering if we were looking at the last 8 years and whoever was doing the monkey was picking a dozen stocks, and I only pick a dozen because that's the bottom end of our diversity kind of thing,
Mm-hmm.
and was picking a dozen stocks rather than just 5. I'm wondering if you shouldn't expect near market returns if the number of times that you did it is long enough.
Okay, so I picked 40 going back over 8 years. You're basically proposing if we pick 12 and we looked at the performance of 96 individual decisions, you think that it might push towards market. I'll check it out.
Well, it might push towards, what I'm suggesting is that my intuition says that it might push towards whatever the market's going to do. It might be enough picks to basically match the market over long periods of time. Now, of course, doing it on any given year, I think is problematic, but doing it 8 years, doing it for 8 years and then looking at what happens, or maybe doing it for even a longer period of time, there has to be a place where that method should begin to match the market, shouldn't there?
And I think it just might have a slight incremental advantage because it's not biased by market weighting, market cap.
I agree with that, and I'm telling myself that all the math that I know about statistics and probability and everything else, there has to be some number of choices each year, and there has to be a number of years that you do it where you do end up with average, and average would be whatever the market performs at.
All right, consider the gauntlet thrown down and accepted. We'll take.
I'm not throwing a gauntlet down. I'm just suggesting that your data so far is telling me that you're on the right track, because I'm saying to myself right now, I think you only have to drop one stock, maybe 2 stocks from the entire sample, and you drop below the market average.
You could be right, and you're saying that I guess the Wilshire 5000 would be the best way to look at it, and we've only got the S&P 500 on here.
Right, and without getting too technical, I think what that is saying is that this distribution is not really widely spaced out, and because you can manipulate it with 1 or 2 pieces of your what'd you say, 96 pieces of data,
mm-hmm.
because you can manipulate it to average with such a slight change, I'm saying to myself that that basically you're right.
Okay.
the monkey has a pretty decent chance over long periods of time of giving you what the market will give you. It doesn't have a good chance of giving you what the winner of the contest would give you, but it has a really great chance of giving you what the market would give you.
Yeah, except he would have won that one year. Okay, so back to regularly scheduled programming. Here's David Einhorn, and this is the point to make. I admire him. I really do. Tremendous respect for him. But man, over the 15 years of the Groundhog, when I said he can be very hot or very cold, this should give you some idea. His lifetime return is negative, even though he's got those 3 championship years. So yeah, hot and cold. And of course, everybody else kind of falls into the mix here. I did want to put in, we spent a lot of time talking about medium-sized companies. Again, over the last 10 years, pretty decent performance for this 10-year entry. And I think we want to come back and talk in greater detail about this, Ken.
Well, and also, Mark, isn't it interesting that the longer periods of time tend to cluster right around 0?
Mm-hmm. In other words, at market.
That's good. I'm glad you said it. Okay.
All right, so let's have some fun. This is one of the treasures of my life. This is all you guys. Neat stuff here. These are the people that have been doing this at least 3 years, any 3 years within the last 16, in order to qualify for our Hall of Fame, our Borough of Fame. And then, of course, you've heard us talk about Broad Assets versus Bower City up at the top. Those are the 2 of the top performing investment clubs. And I know these clubs, they are equally good in their real money stuff. In fact, Bower City submits their real money portfolio for this contest. And Susan Michelik is one of the ringleaders there, right in the center of our chart. This is Susan right here. And she's been a guest damsel for us on the round table. And Ruby Lawrence is one of the leaders of the Broad Assets Club. That's Ruby right in the middle there. So again, their track record is solid. It is just fantastic having them involved. And the club on the far right at the last on the top is the Sirius Club out of Pittsburgh. Now we have lost a few of them to heaven over the last couple of years, but the Sirius Club has been a force for many years. And all of the people on that slide have been very prominent educators to investors in the Pittsburgh zone. Were you going to say something, Ken?
No, I'm just thinking to myself, I got to get you a picture of the Mid-Michigan Club to put on this page here, you know?
That'll be coming. Absolutely.
And we need one of the Space Coast Club up here too, don't we?
Yeah, we're going to look at that too. We've been pushing on them for a picture. And next time they're ever together in person and get a picture like that, I think we're going to need one. So again, just going across all these people qualify. The reason Kurt is golded out there, and so is Len, as they are basically newcomers to the Borough of Fame. Gail Goldstein in the middle there is the current leader in long-term performance. Bonnie and Ellen in the center of that second row. They basically have been around since the beginning, participating in 15 or 16 years. And of course, you guys all know Kim. Kim Butcher has been quite prominent in our investing and education efforts for a long time. John Kimmel, Anna, and her husband Rod Gombar there at the end of row number 2. And again, just I'm not going to hit every name on here. Don and Nancy, 2 of the most special people in my life. Down there in the middle. Ann Manning, our guest damsel out of Houston. She was on our panel at the last national convention. She is just wonderful. And of course, Herb and the Cool Kids. They've been doing extremely well these last few years. We'll look at that in just a second. And Herb has been prominent in all kinds of activities for years. He's the one in the pink shirt there with the Cool Kids. And I just can't say enough about all of these people. All of the knights of the round table are on the bottom row there. And there is Bo on the far right with Steve. And of course, Paul Witt, champions. Shelley Stokes, one of our leaders from the past. Curtis out of Oklahoma. And Dave Bryant, fairly new name to many of us, but he's been at the top of our leaderboards for years. So good, clean fun. What strikes you here?
Those two little kids down in the bottom corner. Paul is still a director on the Mid Michigan chapter, but those two little kids, the littlest one is now a sophomore at university, and the taller of the two has now 2 years into his new job after graduating from Purdue. So give them both big rounds of applause. High class kids, high class parents. Boy, oh boy, time goes fast.
Yeah, I can remember them at that age, and I can remember riding with Paul to Pittsburgh, and Paul was the champion from, I believe, our third contest. So that's 13 years ago. And that picture probably is about that time frame. Okay, anybody else? It's always dangerous to single people out, but these people are all special. Every single one of the people on this chart is in some way influencing individual investors to try to experience successful investing.
Mark, I'm going to let Janet talk to us now, okay? Hold on. Janet, you're self-muted, so if you unmute yourself, the mic's yours.
She's toggling away.
Okay. I'm going to try Kevin. Kevin, your hand is up, and yeah, you'll have to unmute yourself, Kevin, in order to speak.
Kevin Glogly, right?
Kevin Glogly, right? There you go, Kevin. Yep.
Yeah, I was just saying back on the contest,
We've lost Kevin's sound.
Yeah, Kevin, you dropped out on your end, I think.
Yep, I'm gonna put him back on mute. Janet, I'm gonna try once more. If you want to unmute yourself, Janet, you can talk to us.
If you're talking to Janet Lewis, I have not been touching anything, and yet this keeps happening.
Okay, well, I'm going to take the hand down, Janet, and
Static electricity.
don't worry too much about it. Okay, here we go.
All right,
go on, Mark.
We can come back to Kevin as we go. I just want to make sure everybody knows that the numbers are here also. Here are the top 48 participants, again, with at least 3 years of participation in the Groundhog contest. The fact that we have 48 that are beating the market is really quite a number, first of all. So you're looking at their results from the most recent contest in these first two columns, what they achieved in 2022. So there's a fair amount of green on there, but there are a few people that had challenging years. It happens. The average return that you see here would be the average of all of their years of investing in the contest, participating as a groundhog. The number of years is shown here in this last column. So you can see that we're getting to have several on this chart that are in double digits. And so the key column and the one by which it is all measured is how much are their groundhog selections beating the market over the last 16 years. That answer is right here, ranked from best to lowest. And again, these are all, there's another 80 names off the chart that don't beat the market, but there's a bunch of people hovering fairly close to that 0 point. But Gail Goldstein is at the top of this chart because her 4 years of selections have checked in with an average. It's actually a geometric average, but 27.7%. During the 4 years that she's been in the contest, the market's gone up 12.3. So her relative return, again, the answer to the question, how much is Gail Goldstein beating the market over the last 4 years, is by 15.5%. The absolute number is right here, the 27.7. So you can actually look at that number for anybody on the chart. I'll spend one thing talking about the cage match before turning it over to Ken again. Here's the cage match between Broad Assets and Bauer City. Time out for just a second. Be right back. Sorry about that, dead air. Still got you, Ken?
Yep, we're still here, Mark.
Okay, so the cage match between Broad Assets of St. Louis and Bower City, they both have a number of years in the contest. They're both three-time champions. It's just kind of fascinating to watch the two again. Many of the stocks that they submit for the Groundhog Challenge are held by those clubs. So, again, you get up to the 10 years and more of participating, the numbers start to become fairly substantial and pretty meaningful, in at least as a statistician / mathematician from my side of the world. What are your thoughts, Ken?
I love this chart more than anything else that we do, Mark. I love the fact that I can look at people that have been in this contest for a significant period of time, and for me, significance at least 8 or 9 years, and I can peg their relative return that's against the market. I don't want to diminish the folks at the very top of the list, but I think Andy Pagoric there with 8 years and a relative return just under 9%, and the Broad Assets and these folks that are showing not only that they can do this for 1 or 2 or 3 years, but they can do it for really long, extended periods of time. To see people with 15s and 16s next to their name, and then to see them positive against the market, I think is an achievement that should be celebrated from the rooftops. It's the kind of achievement that professionals tell us that we can't do, we can't make happen, and yet we show them that it's happening time and time and time again.
Yeah, and I mean, in terms of what we were just talking about, Bonnie Matter at number 21 there, she had probably her weakest performance in quite a long time. And notice that she didn't lose any ground in terms of ranking, and her relative return actually declined just slightly. So again, that 15 years is getting to be quite substantial. And even though she had a very challenging year, this is still a pretty powerful number. She was probably up a little in the 4 to 5 range last year, but again, that 1 year of challenging market didn't make a heck of a lot of difference. Of course, on the other end of that, Kurt went from being just barely off the list to threatening to win this year, so he jumped up the list. And again, welcome to Andrew Spector at number 16 on the list, and Leonard Douglas, who qualified. Len has been making some pretty good choices for the last 3 years, so congratulations to you, Len, and welcome. And thanks for your help. Anything else, sir?
I
just check in with Kevin. Kevin is.
Yeah, I just find this fascinating here, Mark, and let's keep these slides moving here so that we have a really nice group of folks with us this afternoon. Let's not get them moving away from us. So.
Let's go ahead. We can always open up the floor after we shut down and see if there's any questions or comments. But again, these are all archived on YouTube. If you want to go back and check this out, if you want to share with friends or family members, you can actually take and use the link to share with another person. These are publicly available. We encourage anybody who is interested in joining in on this experience of attempting to achieve and helping others to achieve successful long-term investing, hit the subscribe button. We'll let you know anytime that new content is added. And your warning, or just to let everybody know that March 14th is the date we have penciled in for our discussion of these two books at the same time. It was submitted by Matt Spielman, and I think it's going to be a hoot, just talking about these and how it might impact or apply to your investing experience. Later on this month, we will have our February roundtable, where we have our awards show, where we look back at the selections for the roundtable over the last year. And the teaser is up at the top there. We are crushing it. And the performance of the roundtable over the last year has been quite strong, even during one of the more challenging years. Again, checking at a market beating. That's the amount. Again, that's a relative return, 16.7.
Mark, we're getting some really good questions from Cheryl and from Ann, both of them. They'd like to know where can they find a dashboard that shows the final results for all of the participants.
Well, I'm going to post this as a PDF in the Manifest forum. Anybody that wants it can write to me if you're not a Manifest Investing subscriber. And I've been toying with the notion of perhaps sending it to all participants, but that's a bit of a headache, but we'll see. Yeah, just send me a note. I'd be happy to send the PDF of this session. I actually have a Groundhog extract, which has all of the 4 quartiles of participants. And then we will have the active dashboards for 2023 will be up shortly at the website.
I think Cheryl and Ann are interested in looking at the people below number 40, Mark. So you will be able to provide that for them. Okay, it's coming, folks. Just hit us on the head a couple times next Tuesday if it hasn't shown up yet. Okay.
Oh, it'll be out there. I won't publish the ones at the bottom, but if you participated in the contest, you can see them all.
Great, terrific. Okay.
Just out of because I don't know if I was in 163rd, I'm not sure I'd want to look at it. Of course, I would. I would just try to get better. All right. Just a quick note: we're not going to talk about this, Ken, but a couple weeks ago you asked for a scale change. For the 3rd week in a row, we've had a scale change for the best small companies now.
Yeah, I just said it made me feel real good every time I saw a scale change. So I would be happy to have you point that out every week if it has to happen. Okay?
Don't back away from this. Own it. If you are a market influence and changer, so be it. And our picture for the week, I just got this in the mail from Marianne Wrench in the Cleveland area. I'm officially in the Groundhog Club. That's a coin. It's a substantial coin. So Ken, we have to set up a field trip to there.
Okay.
All right.
Only if we stop at Corky and Lenny's on the way there. Okay.
Corky and Lenny's works for me. All right. I'm going to suggest we go ahead and shut down. We can come back and talk about any of these slides. But again, congratulations to the Space Coast Club, to Gail on her first place ranking in the all-time Borough of Fame. So congratulations to them. David Einhorn needs no more congratulations, but and Lisa Robertson for her #1 finish for 2022. Any closing thoughts, Ken?
Yeah, that's all you get, folks. A kind word, okay?
Although I will tell you that as the trash talking was going on Groundhog Day, the Space Coast was pushing for, Mark, you need to have a prize. Maybe a few months of membership or something. It doesn't even have to be big, but and I don't fail to notice that suggestion.
All right.
All right, so congratulations all. I'm going to stop the recording and stick around for a few minutes.